Hello, how you doing? We just went over the test, so you're catching us at the end. Let me grab these real quick. I hope you folks at home did fine on the test. Somebody was asking me about extra credit, and we were halfway through a very rich discussion on extra credit. And extra credit, I'm always amused by it, because if I gave you folks at home or you guys here, if I gave you a 2-hour project to do and said, I'm going to give you 5 or 6 extra credit points if you did it, everybody would do it. I don't know what it is. But if I just said spend a couple more hours studying for the test than you would have, okay? Or, make sure you do your homework. Because some of the same people, not you, Kara, but some of the same people that always are asking for extra credit when we do quizzes or homework checks or whatever, they're not ready. Extra credit, they're not magical points. 5 points on a quiz or 5 points on a test are worth the same thing as 5 extra credit points. Do you see what I'm saying? So if you spent 2 hours just studying more for the test, or spend a few extra minutes at the end of a test going through it to make sure you didn't make any mathematical errors, those things are much more beneficial than extra credit. But people think extra credit, it's like magic fairy dust, and if you happen to have extra credit sprinkled on you, then your diseases will be cured, and you'll lose weight, and you'll find a special somebody in your life, and a bird will sit and tweet on your shoulder, like in Mary Poppins. Extra credit points are just the same as any other points. When you miss 5 points on a test, that's just like 5 extra credit points. Does that make sense? So I always tell people, don't worry about extra credit points. Don't worry about extra credit points. Worry about the big things, right? Okay? Worry about the big things. Worry about studying for the test. Worry about making sure that when we have a quiz, and we're going to have a quiz next period, make sure you get a 10 out of 10 on that quiz. Okay? Make sure you get your connects done and don't forget them. Make sure, you see what I'm saying? That's much more beneficial. Better use of your time. Okay? All right. Okay, I hope you all did well on your test at home. If you're watching this, folks at home, then you should have taken your test over chapter 3 and 4, which was your second test. Okay? We spent a little time going over it today. And now we are going to start on chapter 5. Now, for you folks at home, I think I emailed you that the chapter 5 PowerPoints were out there, right? For you folks at home, you know where to find those PowerPoints. They're under the Lessons tab on Angel. And let's go ahead and dive into chapter 5, all right? So, chapter 5 is on merchandising operations, okay? Now, coming off the Elmo, or the computer, what types of companies have we basically talked about up till now? Sole proprietorships, you're exactly right. And more specifically, what types of sole proprietorships? Service companies. Very good, Marlon. We've been talking about service companies, haven't we? Things like consultants or accounting firm, or you have a law firm or something like that. It's always been consulting, right? People who sell their time. They sell their time, right? Now we're going to talk about merchandisers. Merchandisers. Another term for merchandisers that you hear are retailers, okay? Merchandisers and retailers are different. They don't just sell their time. They sell a product, right? They sell a product to you. What are some examples of merchandisers and retailers? Well, specifically, like what kind of places could you go?
Clothing stores.
Kohl's, like the clothing store, right?
Yeah.
What else?
Grocery stores.
Grocery store, like a Price Chopper or Hy-Vee, right? What else? Dillard's. Best Buy. The almighty Walmart, right? These are retailers. Are these correct? Or merchandisers. Now here's the distinct thing about a merchandiser or a retailer. For the most part, they do not manufacture the items they sell. They buy them from a manufacturer, and then they sell them to you. Okay? If you go to a Best Buy and walk into the store and look around, for the most part, for generally speaking, they didn't manufacture anything. Best Buy itself did not manufacture anything in that store, did they? They bought it from manufacturers, and now they're selling it to you. Is that correct? So I want to understand what a merchandiser really is, what a retailer is. Which leads one to the, yeah, Jake.
I had a question about things that, like, you can go to Walmart and you buy the great value items that are not made by Walmart, I guess, but, they're...
Yeah, and that's why I was using the term, generally speaking, okay. They do not manufacture the goods. Okay. Because there's always exceptions to the rule. Like, for instance, you can go to Best Buy and get a stereo installed in your car, kind of put together and installed in your car, right? That's kind of a manufacturing process, isn't it? But for the most part, that's why I'm saying generally speaking, there are exceptions. But for the most part, when you go into a retailer, into a merchandiser, the items that are there for sale, they did not manufacture. They just purchased them from a manufacturer, put them out there for you, and now they're selling them to you. So let's say, Jessica, that you go buy a $20 DVD at Best Buy, and you pay them $20, right? How much do you think they paid for that when they bought it from the manufacturer, Sony Pictures?
Probably half that.
Probably not even that. I'm betting about $4. $4 or $5, I bet is what they paid for that. Okay? So think about this. You bought a $20 DVD, Jessica. Best Buy only paid $4 for it. They didn't manufacture it. What the heck good does a merchandiser or a retailer even do? Sounds like they're just are they just a needless middleman, just marking stuff up, making our life miserable? Would we just be in a better world if you could just buy it from Sony Pictures or whatever for $4, $5 or whatever, right? I guess I'm asking this. Since retailers or merchandisers do not manufacture the goods they sell, what do they provide? Jobs. Yeah.
Loads of them.
But what do they provide us? What convenience? You're exactly right, Allie. You're exactly right. Merchandisers and retailers provide convenience. Now let's think about this for a second. Let's say that there was a new law that there could no longer be grocery stores. Okay? Could you get along without a grocery store? Yes, you could. And as a matter of fact, this is how it was in cultures long ago, right? If you needed meat, you went to the butcher and you bought your meat there, right? If you needed chicken, then you would go to a poultry farmer, right? If you needed milk, you would go to a dairy farmer, correct? If you needed bread, you'd go to a bakery, correct? If you needed eggs, you'd go to an chicken farmer or whatever, right? Isn't that where eggs come from? Chickens? Right? Okay? But think about it. You could do that, right? But wouldn't that be a major pain in the rear? Would that not be just... It would take you at least a whole day to do your grocery shopping, wouldn't it? Oh, I gotta go pick up the chickens, and then I gotta go get some milk, and then I gotta go get some steaks, and then I gotta go to the bakery. What time is it? You know what I'm saying? Wouldn't that be a pain? And even today, in modern day terms, if you wanted a box of Captain Crunch, I suppose you could have, if there were no grocery stores, you could have some sort of transaction with General Mills or whatever manufacturing company makes Captain Crunch, right? But wouldn't that be a major pain? Huh? Convenience is the main thing that retailers provide us. We can go to Price Chopper or Hy-Vee, and they have all this stuff available for us. Okay? All right. Good. Very good. Okay, let's talk a little bit about merchandising, and we're going to go back to some of those things that I was just speaking of. Up until now, we have been talking about service organizations. And as I said, service organizations sell their time to earn revenue. Okay? And they have a net income equation that looks like that. Now, I'm going to write it a little differently on the Elmo, okay? Now, I will tell you, for you face-to-facers, I'm going to be writing down some equations, and we're going to have a quiz over those at the very beginning of next period, okay? Now, for you folks at home, I cannot give you a quiz, but I want you to study as if you're going to have the quiz, okay? Because you need to know these equations, okay? So, for a... straighten this out. For a service, that's not, let's get that focused. There we go. Okay, for a service company, our net income equation is revenues minus expenses equals net income. Or, of course, if they have a net loss. But revenues minus expenses equals net income. We know that, right? We know that. So for a service company like plumbers, law firms, consultants, they sell their time. They don't sell a product. And their net income equation is revenues minus expenses equals their net income. Now, we're going to talk, though, about merchandising companies. And like I said, merchandise companies, they buy the product from the manufacturer and they sell it to us. Okay? They sell not their time, but they sell a product. Okay? And we just kind of think, we don't really differentiate in this class between wholesalers and retailers. There's just merchandising companies. These are companies that buy products from manufacturers, and then they sell them to the end customer. Okay? Now, their net income equation looks a little different. Okay? The net income equation for a merchandiser looks a little different. And you can see it stated there in the middle of your screen horizontally. Now, I want to go back to the Elmo and write it a little different way. So this is a merchandising company. Now let me write this out and then we'll explain it, okay? Let me just write it out. I can't talk and write at the same time, so. Okay, that is, and just go ahead and leave it on the Elmo if you would. That is the net income equation for a merchandising company. Let's talk through that a little bit. Okay, sales. What is sales? Sales is the same thing as revenue, except we call it sales for merchandisers. Okay? It's a credit balance account. It is on the income statement. It's a temporary account. We just don't call it revenue for a merchandiser. We call it sales. You with me? Now, we have something in merchandising company abbreviated CGS. Do you know what that stands for? Cost of goods sold. There is, in merchandising company, we have our sales less our cost of goods sold equals what we call gross profit. This is also sometimes called gross margin. Okay? Now there's no cost of goods sold for a service company because there's no good that is sold, right? But for a merchandising company, sales minus cost of goods sold equals gross profit. So Jessica, when we were talking about you buying a $20 DVD from Best Buy, the sale amount of that would be $20. And the cost of goods sold on that was, we decided, $4, which meant the gross profit on that one item would be $16. You with me? Okay. So going back to this equation, sales minus cost of goods sold equals gross profit. Now that's not all expenses, that's just the cost of the good that was sold. Then we have to subtract what we call operating expenses. These are things like advertising expense, salaries expense, rent expense, insurance expense, depreciation expense. The sort of expenses that we're kind of used to on a service company, okay? And then that gives us our net income, okay? So when we go back to Best Buy to cut them a little slack, we're saying, now wait a minute, they only paid $4 for this DVD that they sold you for $20? That seems like quite a hefty markup. Well, yeah, but that's not all their expenses. Their only expense isn't just the cost of the goods that were sold, right? Think about how much advertising Best Buy does, right? Or their salaries, insurance, all those sort of things. They have to mark those things up enough to cover those costs as well, correct? Okay. So let's look at those equations again. I want you to know these. I want you to know these because you will utilize these a lot, not only in this class, but accounting 2, managerial accounting, any other accounting business classes, you're going to use these a lot. So that is why I'm going to lovingly give you face-to-facers a quiz at the beginning of next period. Okay? And for you folks at home, I'm going to show you the quiz, and maybe you can just push pause on your computer and act like it is a quiz, even though it won't be graded as such. All right? Now going back to this. This is mainly what they've said here, right? Sales minus cost of goods sold equals gross profit minus expenses equals net income. Now right here is an income statement, for the year ended December 31, 2011 for a fictitious merchandising company. We can kind of see how that income statement looks a little different, right? They had $150,000 in sales. The cost of their goods that they sold were $80,000. That gives us gross profit. Then less operating expenses gives us net income. You with me? Questions on that? Okay. Now let's talk about the operating cycle for a merchandiser. This is important. Okay, if it's a cash sale, and we're looking at all this from the perspective of the merchandiser, remember. But they have cash. Let's just say this is Kohl's. You ever shopped at Kohl's? K-O-H-L-S? They sell clothes. So let's say Kohl's, they have some cash, and they purchase some inventory, and then they sell it to the customer, and they get cash, and they purchase more inventory, and they sell it, and they get more cash, and it's just the circle of life, right? Okay? Lion King, right? It's very similar if you have credit sales. You have cash, you purchase clothes, you sell it on credit, and you have an account receivable, but then eventually the customer pays you and you have cash, and you go through it all again. You with me? Okay. These are what we call the operating cycles for a merchandiser. And it leads me to something that's very important here. So if we come off the Elmo. I always feel so narcissistic when I say, come off the Elmo. Show me, I want to be on camera. Okay? But I'm on camera here. I want you to understand this. It's very important. A merchandiser, let's say Best Buy, there's two roles they play, two very large roles that they play as a merchandiser. Think about this. They do a lot of purchasing from manufacturers, don't they? I mean, every one of those items you see in Best Buy, every computer, every television, every washer and dryer, every DVD, every CD, every computer cable, every computer game, every one of those was purchased from a manufacturer, right? So that is the purchase side of a retailer. They're doing all this purchasing for manufacturers, okay? But then the other hat they wear, so to speak, is when they sell them to customers. You see what I'm saying? We didn't have those two roles with a consultant, did we? They didn't do a lot of, I mean, every now and then they'd go buy some office supplies or a fixed asset, but not to the level like Best Buy or grocery store or Walmart purchases, right? So there's two distinct cycles we will talk about, or two distinct roles that we will talk about with a merchandiser. We're going to talk about the purchasing side when they're acting as purchaser from the manufacturers, and then we'll talk about the sales cycle when they're selling to customers. Does that make sense? And if you go back to the computer screen now, you can kind of see that this is what they're trying to say. There's purchasing and then there's sales. There's purchasing and then there's sales. Okay? Now, one thing you'll hear me say is when we start doing the journal entries, I want to make sure you're always shifted into the correct gear. Are we purchasing now or are we selling now? Okay? Because if you're in the wrong gear, you're going to make a lot of mistakes. But you have to ask yourself, as the retailer, as the merchandiser, am I purchasing right now or am I selling right now? Make sense? Cool. Okay, this gets to the next really, really, really important equation that I want to go over. And this one's probably not as well known to you at this point, but it's equally as important. And what they're saying here is beginning inventory plus your purchases equals your merchandise available for sale. And that equals your ending inventory plus your cost of goods sold. I want to write this a little differently, okay? So let me go back to the Elmo and allow me to write this equation, okay? And I call this the inventory flow equation, okay? This is the inventory flow equation for a merchandiser. What we do is we take our beginning inventory plus our purchases, and that equals what we call goods available for sale. Then we subtract out our ending inventory, and we come up with cost of goods sold. That's basically the same equation that the computer was showing us, or saying. It's just written vertically. Okay? Beginning inventory plus purchases equals goods available for sale. Less our ending inventory equals cost of goods sold. You with me? Now I don't want you just to memorize things. I'm always big on don't just memorize, I want you to understand. So let's dissect this thing a little bit. Okay? Let's just take a look at this right here. Okay? Goods available for sale. Okay? I don't care about this right now. Goods available for sale. Okay? All right, let's come off the Elmo for a second. What's today? Today is October. For us, for you at home, it's probably something different. But for us, what it is, it's October the... Is it the 7th? Okay? Yeah. October the 7th, okay? Now, Jessica, let's say after class today, you go to Best Buy, okay? You walk in the store on October 7th, and you pick up a DVD, okay? Well, that is one good that's available for sale. That's correct? And as a matter of fact, if you look around the store, just look at all this stuff all around you, you are surrounded by goods available for sale. Make sense? On October 8th. Now, generally speaking, that DVD that you're holding came to be a goods available for sale by one of two ways. Either it was beginning inventory at the beginning of October, or it's a recent purchase during the first part of October. Would you agree? Generally speaking, that DVD that you're holding was either beginning inventory or a purchase during October. Generally speaking, as you look at all these items, all these wonderful things that Best Buy has to sell to you, every item in there was either beginning inventory at the beginning of October, or they purchased it those first 7 days of October. Does that make sense? Now let's go back to that equation. and maybe this will make more sense. We talked about goods available for sale. Goods available for sale equals beginning inventory plus purchases. Make sense? Beginning inventory plus what you purchase equals your goods available for sale. Cool? Now, coming off of that, generally speaking, that DVD that you're holding on October 7th, Jessica, generally speaking, one of two things will happen to that DVD. It will either be sold during October or it won't be sold. And if it's not sold, it will be ending inventory at the end of October. Does that make sense? As you look around at all this stuff, generally speaking, one of two things is going to happen. Either those individual items will be sold, and this will be cost of goods sold, or they will not be sold, and if they are not sold, then they will be ending inventory at the ending inventory at the end of October. Correct? And of course, we know that October's ending inventory is November's beginning inventory. Correct? So going back to the Elmo, let's take a look at that equation. It should make more sense. We already talked about the top half. Your goods available for sale are comprised of your beginning inventory plus what is purchased. Okay? If I subtract my ending inventory, I will have what is sold. So everything here is either this or this, generally speaking, right? It's either sold or it's not sold in its ending inventory. And as a matter of fact, I could, if I wanted to, if goods available for sale less ending inventory equals cost of goods sold, I could have actually written it this way too, right? Minus cost of goods sold equals ending inventory. Is that right? If 6 minus 4 equals 2, then 6 minus 2 equals 4, right? So I could write it that way, or that's the more common way that we do it. Are you with me? Okay, that is a very, very, very important equation, and I want you guys to know that. You will see that a lot in your business education, and you're going to see a lot of different derivations of it too. Okay? Coming off of that, are there any questions right now? Yes?
What decides when they start being? It can be monthly, annually, quarterly.
Yeah, that's a good question. You have to, just like we talk about income statements, we have to talk about a period of time. For the example I was just giving, I was saying for the month of October, but you could do it yearly or annually or whatever. Yearly and annually, the same thing, right? You could do it annually or weekly or monthly or daily or whatever. Okay. Now, let me show the two equations for merchandisers. What's the common denominator there? What appears in both of those? Cost of goods sold. So a lot of times what I'm going to do is give you information. You have to figure out cost of goods sold, and then you plug it in this equation. Are you with me? As a matter of fact, for you face-to-facers, and for you people at home, I want you to just imagine I'm going to give this quiz to you too. I'm going to quiz you on this, but here's how I'm not going to do it. I'm not going to say, write out the inventory flow equation. What I'm going to do is give you a bunch of numbers, and I want you to compute what I ask you to compute. Does that make sense? We're going to do an example here in class. We're going to do an example. And here is the given information. And I just gave it to you in random order. Beginning inventory is 1,000. Ending inventory is 4,500. Sales are 30,600. Purchases 13,900. AP is 1,500. Operating expenses are 7,000. What I want you to compute, maybe and maybe not in this order, are gross profit, cost of goods sold, and net income. Okay? This is how your quiz will be. This is how I will quiz you to see if you know what you're talking about on those equations. All right? So what we're going to do, why don't you just roll that music for 2 or 3 minutes, and you folks at home, I want you to do this as well. Figure out what I'm asking for at the bottom using the given information here on this slide. We'll see you in a few minutes. Alrighty, let's take a look. This is exactly how the quiz will be, okay? And so let's go ahead and solve this, all right? Okay, the first equation we're going to use is this one, okay? Beginning inventory, or the inventory flow equation, okay? So, let's see, our beginning inventory was $1,000, is that correct? And then we added our purchases, which were $13,900. If I would have asked for goods available for sale, the goods available for sale would be $14,900. Would you agree? And then I ask you to subtract out our ending inventory, which in this case was $4,500. Is that correct? Which gives us cost of goods sold of $10,400. Agreed? Okay. So now we're going to take that cost of goods sold of $10,400 and we're going to go over to this equation, solve the rest of this, okay? All right, our sales that I gave you were $30,600, is that correct? Minus the cost of goods sold, which we computed of $10,400, equals a gross profit. That was something I asked you, which was $20,200, okay? Minus our operating expenses, which were $7,000, gives us a net income of $13,200, okay? So that gives you, and I usually don't ask you for the things in the same order as that you solve for them, right? Let me ask you this. I told you that accounts payable was something, right? Did anybody try to use accounts payable in there? Usually students, if I give you something, going back to this, I said accounts payable is $1,500, right? Is that relevant? No. People go, oh, Dave, you're trying to trick us, okay? But most of the time, students will try to put that AP in there somewhere. But AP, going back to those equations, is AP a part of any of these equations? Do you see accounts payable anywhere? No, but students will try to put it in there, okay? All right? So part of life is not only knowing what information you need, but part of life is always knowing sometimes what information is, for at that point, irrelevant, okay? So that is the way that I will quiz you over those. Does that make sense? But having a firm foundation of those equations, all three of those equations, one more time, all three of those equations, having a firm foundation of these three equations is going to be very important in chapters 5 and 6 and even way beyond that. Okay? Cool. Any questions on that? Awesome. Okay? All right. Now, we're going to go ahead and stop for today, but I'm going to give you a little bit of homework. Okay? Jake, can you do me a favor? Pass one of these out to everybody.
I'm not going to lie, if I had seen accounts payable, I probably would have tried to put it in.
Well, I appreciate your honesty. I think I could make up an account called Little Pink Bunny Rabbits, $2,000, and students would either add it or subtract Little Pink Bunny Rabbits. Because they're just, he gave it to us, it's got to be usable, right? Not so fast there, okay? All right, what I want you to do, there's not a lot of homework tonight, okay? But what I want you to do is study those equations and be ready for the quiz, okay? And the next thing I'd like you to do, I'd like you to read the whole chapter, but make sure you read pages 180 through 184, because I want you to try to do something that we haven't talked about at all. We're going to talk about it next time, but I think it'll help you if you try to get a little jump start on it, okay? Read those pages, and I want you to do what I just passed out, or what Jake actually passed out, and it's called Chapter 5, Basic Purchasing Journal Entries. For you folks at home, this is in the handouts under Chapter 5 under Lessons tab, where everything else is. So from your reading, this is not through what we did in lecture today, but from your reading specifically of pages 180 through 184, I want you to go ahead and try to attempt this. Does that make sense? So that's all I want you to do. Okay? All right, folks. We'll see you later.